Long-term bulls on Lowe's are simmering down on expectations for the stock. D.A. Davidson downgrading the company to neutral from a buy, noting that shares are due a pause. Here for more on this is Michael Baker, D.A. Davidson Managing Director and Senior Research Analyst. Thank you for joining us here today. Just give us your big picture overview of your call on Lowe's.
Sure. Yeah, it's been a great stock. I find it really interesting that Lowe's has outperformed Home Depot 6 years in a row and 7 if you include 2024 year to date. Much of that is because they've been able to close the margin gap. 6 years ago in 2018, it was 600 basis points. Now it's about 90 basis points, so it's 85% of the way narrowed. And we just don't think it's going to be that easy for them to narrow the rest of it. In fact, we think the margin gap might even widen a little bit more towards Home Depot's favor this year. And so if that outperformance has been driven by, we think, Lowe's ability to close the margin gap, if that's no longer the case, then we don't see Lowe's necessarily outperforming Home Depot as much this year.
And Michael, to be clear too, it's not like you seem to have any kind of issue with CEO Marvin Ellison or the leadership team, right? In fact, you still sound like you remain a fan.
Brilliant, like absolutely brilliant. They came in 2018. Lowe's was a good concept from a consumer standpoint, but arguably was not as well run as Home Depot. Marvin Ellison, of course, came from Home Depot, a stop at JCPenney, but spent 12 years at Home Depot. Sort of knew the playbook, we think, on how to turn Lowe's around, brought in a very talented management team around him, and has really succeeded tremendously. Again, closed 85% of the margin gap. It's been quite remarkable, and we're still huge fans of Marvin Ellison and his team. It's just that a little bit of a victim of their own success, again, and having closed 85% of that gap. The rest is going to be a little bit more difficult. Now, there's still a pretty big sales productivity gap, primarily on the pro business, and that's the next thing we think they work on. But our view is, A, that'll be harder, and B, the valuation sort of reflects that a little bit more now. Lowe's at 21 times forward earnings. That multiple has expanded by 400 basis points year to date, and it's towards the high end of where Lowe's usually trades.
And so you talked about a couple of things that they need to work on. Is the strategy now, okay, the big turnaround winding down, and now they just have to execute in various areas, just kind of cleaning up? I'm just wondering what the strategy here is, and is there going to be some kind of retooling for another grand strategy that appears in the next few years? I guess what's the next big thing for Lowe's?
Yeah, it really is that pro business. It's about 25% of their business. It's about 50% of Home Depot's business. So if you do the math on sales per store and then break that up into DIY sales per store and pro sales per store, the entirety of the productivity gap between the two companies is on the pro side. In fact, Lowe's leads Home Depot in DIY sales per store. But the opportunity is in the pro initiative, and we do think they're making strides there. There's just a long way to go. And again, we think that's just a little bit harder than improving the internal operations on the margin side. Plus, you have that valuation, which to us is looking a little bit toppy right now for Lowe's.